Right now, if you looked on YouTube or on financial media in general, there's no shortage of information and of people shouting about the impending stock market crash or the impending lost decade that's about to come around the corner. I mean, as a matter of fact, we have one of my favorite investors of all time, Charlie Munger, saying that for the next decade, we will see lower returns in the stock market. And then on the other side, we also have Ray Dalio, another guy I really like when it comes to investing, saying that we're about to approach a lost decade in the stock market. Plus, if you just go on YouTube, there is no shortage of videos talking about stock market crash, invest now or wait, stock market crash, impending stock market crash. Every single video is talking about the fact that the market is going to crash. And so everybody's wondering, how do I protect myself? How do I make sure that I don't fall for the stock market crash? How do I make sure that I don't lose money when it comes to the stock market crash? And so that's exactly what we're going to talk about today. How to protect yourself from a stock market crash. How to ensure that you don't lose money when it comes to a stock market crash. So let's get right into it right now. Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, I'm gonna tell you no, don't hit that like button just yet. Wait until the end of the video. If you enjoy it, hit the like button at that point in time. All right, deal? Let's get right into this thing. So like I said at the beginning of this video, you're seeing all kinds of content, whether it's financial media or YouTube, TikTok, Instagram. Everybody's talking about the impending stock market crash. Everybody's talking about, oh my God, the stock market is about to explode. The stock market, if you're looking on YouTube, they'll say the words like explode, crashing, continues to crash. The crash has not ended. We keep losing money in the stock market. Stocks keep crashing and crashing and crashing and crashing. We keep seeing those videos over and over and over again. And everybody's trying to figure out, what do I do? What do we do? And I'm going to answer that question straight up. There is nothing that you can do. Yeah, that's basically it. All right. Thank y'all for watching. I appreciate y'all for your time. I'm gonna chat y'all. I'm just kidding. I'm not doing that. Let's talk about that a little bit more. I know that is not the answer that most of us want to hear. I know that most of us are like, what do you mean there's nothing that I can do to protect my downside? Well, first of all, I just want to play this clip from one of my favorite investors of all time, Peter Lynch, when he talks about stock market crashes and what you can possibly do when it comes to stock market crashes. And then he also talks about his record when it comes to stock market crashes. So let's watch this video real quick.
Nice enough to say nice things about Magellan, but in those 13 years, 10 times it declined over 10%. You know,
but your point was that you were confident enough to say, when it's declining, to know when to give up and when not to give up most of the time.
Right. I mean, I'm saying when the market went down, I would always go down. So
Sure. But you wouldn't go scared because you'd invest in a company.
That's right. I'd just say if the company's fine, it's fine. I mean, basically, Johnson & Johnson's higher than it was 40 years ago. Their earnings are higher. Xerox is lower than it was 40 years ago. The earnings are lower. So.
Yeah, of course.
And that's pretty much it. Like he said, one of the things he said was like, over 10 years when he was investing, the market fell more than 10%, and he fell more than 10% every single time. When the market was lower, he was lower. In other words, there's nothing you can do. And this is a legendary investor. Peter Lynch was one of those investors that over time, he averaged almost 30% return. Better than Warren Buffett that we all love so much. Better than Warren Buffett, who we just watched at the annual shareholders meeting. So the point is, there's literally almost nothing. Actually, not almost. There is nothing you can do. When the stock market falls, your account is going to fall. And so I think what we have to deal with is the mindset. We need to deal with the mindset when it comes to investing. We have to understand the risk of investing. It's not just about the dollars and cents. It's more about the mindset that we have when we go into an investment. If you listen to Peter Lynch, one of the things he said was he cares more about the company that is investing in. So now my question to you is not, how do we prepare for a stock market crash? Or what do we do if the market is a bubble? How do we invest in a stock market bubble? That's not the question we need to be asking ourselves. The question we need to be asking ourselves is as follows. Why am I investing? Why am I investing? Am I investing because of the hype? Am I investing because everybody else seems to be making money doing this thing? Am I investing because somebody told me this is what I need to be doing? Am I investing in this company because I saw somebody else make money off of this company, so I don't want to look like a fool, so I'm going to invest in it as well? Am I investing because that's all I'm seeing on social media? The question, this is the primary question that each and every single one of us need to ask ourselves. Why am I investing? Somebody said this one time. They said, more people lose money preparing for a stock market crash than is actually lost during the stock market crash. More people lose money preparing for a stock market crash than is actually lost on the stock market crash. In other words, it comes down to your mentality. If every single time you're trying to figure out, how do I hedge my bet? How do I do this? How do I do that? Like if you're always trying to find a corner to play, you're never going to actually make any money investing because you're too focused on the wrong thing. And as a matter of fact, just to show y'all another way to think through this is a chart of all the annual returns that the stock market has had since 1926. If you just look at this graph, what you can notice immediately is there's a whole lot more positive than there is negative. If this chart doesn't make sense to you, look at this. This is the stock market 0 to 10% and above over here, 0% or above over here, 0% or less over here. If you notice, there's a whole lot more years when the stock market is going up than it's going down. So my question to you is, if I gave you the opportunity to flip a coin, if 8 out of 10 times you flip that coin, you're going to win money, what you gonna do? You gonna sit on the sidelines and be like, I'm not gonna flip a coin because I might lose money? Or are you gonna flip that coin 10 times to make sure that you get the 8 times that you're gonna win that money? As Monish Prabhai says, he says, heads, I win a lot. Tails, I don't lose that much. If you decide you want to hedge and not invest in the stock market because you feel like, oh my God, we're going to lose all kinds of money, the only way you can really avoid losing money in the stock market is to just don't invest at all. Just sit on the sidelines. You will never see your money go lower. However, inflation is going to eat away at it. So even though you're not losing money, at least it doesn't look like you're losing any money. You're actually losing money. So my question to you is, are you going to play this game? And then why are you playing this game? Why are you investing? If you start off with answering that question of why am I investing? Why do I want to invest in this company? Why am I investing in the stock market in the first place? If you can answer that question, then a lot of the noise that goes on in social media and goes on financial TV and all this other stuff, you won't pay attention to it at all. You won't pay a single dime of a second of an attention to any of it because you understand your why. So for me, all I'm doing is I'm going to continue investing in the companies that I already invested in. As a matter of fact, if you compare my returns since March 29th till now, by the way, check out on Finance. It's a great way for you to put all your portfolios into one place when you're investing. But I'm getting destroyed by the S&P 500. I'm not beating the S&P 500 right now, but it doesn't bother me. It doesn't bother me because the companies that I'm invested in, I'm investing in them for the long term. If we go into my portfolio, we have a lot of companies in here that I believe in for the long term. So for example, SCHD is an ETF, Microsoft, Apple, Google, Bank of America, Amazon, Intel, Realty Income Corp, Dropbox, all these companies that I believe that in the long term, they're going to be good. And I'm going to keep investing in these companies. Why? Because I believe that these companies are going to be fine moving into the future. So I don't care about the noise. My why is very, very well situated. Very well situated. And so I don't pay attention to all the noise. I'm going to do what I've been doing, which is dollar cost averaging. Every 2 weeks, I'm going to put $50 into this account and I'm going to buy some $50 and we're going to buy companies that are either drop down in price, either at a fair value margin, and I'm going to buy into them or just buy into the ETF. And of course, on my 401k side and my IRA, I'm already doing that. So my thing to you is stop trying to figure out when the next market crash is or how to play the market, how to make sure you don't lose. Don't worry about that. Just figure out why you're investing, why you're buying certain companies, why you're buying crypto if that's your thing, and then hold on to that why, because that will see you through, not the hedging and all this other stuff that you see all over the place. But anyway, that's all I got for y'all. I hope y'all enjoyed this video. This video was actually inspired from a blog that I read, or rather a newsletter I read from M1 Finance. It's called the Investors Mindset blog or Investors Mindset newsletter. I really like it. If you want to check it out, I'll put a link down in the description. And also, if you want to check out M1 Finance, I have a link down there where you can get $30 $30 to start investing if you deposit, I believe, $100. Of course, I'll also get $30, so we help each other out. But if you want to check that out, all of that stuff is in the description. But anyway, that's all I got for y'all. I hope y'all enjoyed it. I hope y'all liked it. And if you did, hit that like button. If you enjoyed it, hit that subscribe button. But it's been your boy Kelechi. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And I'm out. Peace. Whoosh.